For more on the markets, we want to bring in Peter Oppenheimer. He is the chief global equity strategist at Goldman Sachs. And Peter, the debt ceiling, is this something that you are now considering with stocks, or is this something that you think eventually will get resolved at this point?
Hello. I think it eventually will get resolved, but that doesn't mean to say it's not going to be a problem for the market. I think really equities are priced for the best possible combination of a soft landing and rates coming down in the second half of the year. And anything that dents consumer confidence, which has been holding up well to date, or raises the risk of some further weakness in activity, I think will push the equity market down, given that it has really a very high valuation. So we do worry about it in the near term.
So obviously we'll be watching the retail earnings very closely this week to get hints of what's happening with the consumer. Home Depot out this morning, the first of those big retailers to report, talking about how same-store sales were off considerably more than had been anticipated, a drop of about 4.5% versus a decline of maybe 1.7% that had been estimated. Also talking about how they're lowering their guidance for the full year. They just point out that it has been a lot the last 3 years. They've had a very strong consumer, and maybe that is either reverting to normal or you're seeing a slowdown in the consumer. What's your concern when it comes to the consumer? What do you think is most likely?
Well, I think actually consumption will hold up quite well. We're optimistic that the labour market will remain strong, and that's been really the key to keeping consumption relatively buoyant, not just in the US, but actually in other parts of the world as well. Nonetheless, I think things like the debt ceiling and things like the regional banking issue do weigh on confidence. And that's something that I think will be reflected in some of the more discretionary parts of the market as we go through the remainder of the earnings season and into the second half of the year. So really what happens to the labour market and unemployment from here, I think, is going to be one of the most crucial parts of the macro picture to understand.
So what are you advising people to do right now when it comes to the market?
Well, there are a couple of things. Firstly, we've expected for a long time for equities to be stuck in what we call a fat and flat range. So relatively low flat returns from an index perspective, but with quite a wide trading range. We think the markets are towards the top of that trading range at the moment. In that context, two things I would say. Firstly, we've been overweight of non-US equities, which have a much lower valuation and relatively similar fundamentals. And secondly, really being up in quality, focusing on those parts of the market that have strong balance sheets, stable and relatively predictable cash flows and high margins. And that's really where I think most of the return is coming from. But I think will continue in what's likely to still be a relatively unexciting prospect for broader equity index levels.